Hello traders, hope you had a great week. Welcome back to my channel FX Inspiration. Kindly subscribe, share, like and comment if you find this video helpful to you. Now, this is just a continuation from the last topic that we learned. We are going to look at so many other examples about the strategy that we learned, and I've done this so that you may be able to deeply understand this concept. Thank you for watching the first video which I recently uploaded. I think it's last week. Thank you also for the views, the likes and the comments and the subscriptions. And for those who did not like, subscribe or comment, kindly do so that we may grow together. Now let's dive into today's discussion right after the intro. So we talked about support and resistance, trend lines, chart patterns and candlestick formations on our last video. So if you didn't watch our previous video, please go ahead and watch it so that you may get an understanding of the following concepts. And we also said that we are going to use the formula REST to get into our trades. R is for reason, E is for entry, S is for stop loss and T is for take profit. Okay, so let's get into our strategy. Now we are going to use support and resistance for our first example. As you can see here, we have this zone here. It acted as a support here on the first price action. Then it acted as a resistance. As you can see, it broke this zone, broke it, then came and retested it at a future price movement. Now we are at this zone. Now as you can see here, price acted as a support here, acted as a resistance, broke it, we didn't have a support here. Now price has come to retest that zone. Okay, now price has come to retest our zone, as you can see here. So this is the daily chart, and it is a GBP USD chart. This is our forex chart. Okay, so now let's head down into our 4-hour chart and see what if you're going to get any chart pattern or any candlestick formation or any a break of a zone, then a retest of a zone. So let's play it forward and see what we will get. And remember, you trade what the charts give you, don't trade what you don't see. So the price has reached that zone. We can go into our deeper time frames, but you can also trade this time frame. That is if you are a swing trader, because this is a 4-hour chart. If you can wait for price to form, because every candle here takes 4 hours to form. So if you can wait for a chart pattern, for example, a double top to form here, that is 4-hour candles, you can wait. But you can also go into your deeper time frames, like for example the 15-minute. That is if you can't wait for the 4-hour candlesticks to form. Okay, so we came down here. As you can see, the price came down here, and we have a bullish engulfing candlestick here. You see this candlestick here, it has engulfed this red candlestick here. Okay, so that will be our entry point. But I told you need to have a lot of confirmations in order to be safe in the market. So if you are an aggressive trader, you could have entered from here, just target some little pips, not a very wide target. Like let's say for example here. Okay, that is if you are an aggressive trader. But you can also wait for other confirmations, like for example a break of this zone, which it did. Then as you can see here, this is a support. It broke this zone, then it made a support here As you can see, if we drop to the deeper time frames, we will able to see that this is a support zone. Let us drop to our deeper time frame so that we can see. Let's go to the 5-minute chart and see if it made a support from there. Okay, so price is going down. Let's wait for it to break that zone. As you can see, even in the 5-minute chart, it gave us a bullish engulfing candlestick, which means that buyers are entering the market. But please wait for that confirmation before getting into the market. So let's wait for that break. Let me speed it up a little bit. Yeah, so it has broken, and as you can see, the price is retesting. Then it gave us a bullish engulfing candlestick. You could have also made your entry from this position. You see, it has given us a doji candlestick. In the first lesson, we said that a doji candlestick has a small body and big wicks, big upper body wick and big lower body wick. So it gave us a doji candlestick. That means that sellers are unable to push this market down. It gave us a retest, a bullish, another confirmation, that is a bullish engulfing candlestick. Now you could have also taken a trade from here. So let us get back to the 15-minute, that because that is where we are going to take our entries from. And let's see how the market played out. We are still waiting for our entry. This first entry, that is if you are an aggressive trader. But let's see how the market will play. If it is going to give us a retracement back to this zone, maybe, because I've told you, you trade what the market gives you. You don't trade what you don't see in the market. Okay, so now let's see how the market played out. If you kind of entered from this position, you see we have not yet reached our position, but we will maybe reach our position. It did not retest our zone. The price went up, as you can see. If you could have entered at this bullish engulfing candlestick here, this bottom one here, you see that bullish engulfing. This bullish engulfing candlestick here, you see that bullish engulfing candlestick. You could have entered from there. Eventually, it could have eaten your take profit, as you can see. That is if you're an aggressive trader. But if you need some other confirmations for the market to go up, you can also wait. We have it did not get into our zone here, the bottom box, but we have a support zone here because here price has reacted many times. It became support here, broke, it has retested, it has gone down, and now we have a support here. So for the 5 minutes, the one who entered in the 5 minutes, you can see this zone which I talked about. You see that zone, it made a support here. Now it came and retested. You could have also made an entry from there because it gave us a doji candlestick here. As you can see that candlestick, this is a doji candlestick, then a bullish engulfing candlestick. You could have entered from this bullish engulfing, then just target maybe there, because we had many touches at this zone. So that is for who could have entered in the 5 minute chart. Now it has retested in our zone, and as you can see, it made a double bottom. That means that the sellers are unable to push this market down. So let's see if it will give us a bullish engulfing candlestick that as a confirmation that the market will go up. Unfortunately, it broke down, but let's see. Let's go back to the 15 minutes time frame. Now this is where price has reached. Now let's go to the 5 minutes time frame, because I can see we have this is the support zone because price reacted once, twice, thrice. Now let's go into our 5 minute time frame so that you can see these prices better. Okay, so let's draw our zone here, because this is a very important zone. You can remove these other zones because they might be making your chart look more dirty, but you can reduce those zones and look for, because you know that the market is going to be bullish. Okay, now we are just going to the 15 minutes time frame, the 5 minute time frame, those lower time frames, so that you can take your entries from there. But you can also wait in the 4-hour time frame, if that is, if you have that time to wait, you have that patience to wait for the market to react. So we have that zone here. As you can see, price made a support from here, 1 2 3 4, then it broke, made a retest, went down. Now the price has broken. You can remove this level. Now the price has broken and has come to retest that zone, and it has given us a bullish engulfing candlestick from there. Now that's another confirmation that the market will be going up. So you could have entered from this position after seeing that bullish engulfing candlestick, because you know that the market is going to go up. From the daily chart, we went into the 4-hour. Now we are in the 15 minutes and the 5-minute time frame. So you could have taken your buys from here, because this zone is a major zone. It has acted as both support and resistance. Now let's see how the market played out. The market eventually hit our take profit. You could have targeted that zone, and in less than this 5 minutes, 10, 15, 20, 25, 30, that 5 minutes, less than an hour, you could have hit your take profit, gotten your money. So that is how you take entries from the lower time frame, using support and resistance, candlestick confirmations, and chart patterns. Now let's go back to the 4-hour time frame. Let's see if it gave us a beautiful entry. In the 4-hour chart, we do not have an entry to take, because first, we don't have a candlestick confirmation. There's no bullish engulfing candlestick here, and second, we don't have a chart pattern, and we also don't have any confirmation that this market is going to go up. Now let's drop into the 1-hour time frame and see if you have confirmations. Learn to utilize all time frames, because you might be waiting in the 4-hour time frame and there's a very nice thing going in other time frames. So learn to utilize many time frames. Like for example, in the 1-hour time frame, you see this zone, it acted as both support and resistance. Okay, so you can anticipate something from here in the lower time frames where you can get into. Let's play in the market and let's see if we will have an entry. As you can see, the market went up. If you could have dropped into the lower time frames, because this is a 1-hour candle chart, and in this 1-hour candle chart there are many things happening in the lower time frames. As you can see, it acted as both support and resistance in the 15 minutes time frame and eventually went bullish. But here we did not have a good entry model, because price just shot up eventually. But if we could have placed here, for example, a buy limit, the price will have gotten down, hit your buy limit, then go up. Okay, there's also this zone here. There's also this zone here where price acted as a support for a very long time. It hit many times, as you can see here, then broke, acted as a resistance here, this red candle, then broke. Now it has gotten up to this position where we can anticipate for buys because price has broken that zone. Now let's get down into the lower time frames for our entry. Where's my zone gone? Let's draw it again. You have that zone there. Let's drop down into our 15-minute time frame. My zone has again disappeared. Sorry guys, I'm trying to look for my zone, but I can't find it. Let's draw another one. We're in the 1 hour time frame, that is our zone. Okay. So as you can see, even if you could have stayed in the 1 hour time frame, you see that here is a bullish candle, a bullish engulfing candlestick, where we could have taken our buys from there. That is if you're an aggressive trader. Okay. If you're an aggressive trader, you know where the market is going, you can enter with this model that I'm teaching you right now. Okay. It's not a must you wait for confirmations or all that stuff, but I would advise you to always wait for confirmations no matter what. Don't be a greedy trader. Always wait for confirmations. Every time that you are trading, always wait for confirmations. But this model is for those aggressive traders who don't need a lot of confirmations where the market would be going. We have another retest from me, a very nice retest, a very bullish engulfing candlestick. Yeah, that you see, that is a nice, that is where you could have gotten into, because here price touched the first time. Now it has come to retouch the second time. Let me delete this so that you can see it better. Now that is a very beautiful confirmation, a very nice confirmation that this price is going to head into a direction. Now you see, if you have many confirmations in your trading plan, you have no reason to not buy this market. Okay, because the first reason, price made a support. The second reason, it made a resistance here. Now price has broken, made the first touch. Then it made a second touch. This is a very nice entry. Target that top, okay, because here price targeted was support and resistance. Target maybe, let's say there. Put your stop loss just below this box, entered on that bullish candle. You see, that is a very nice trade. The reasons I've already mentioned. The entry, you made it on the bullish candle. This is from the formula rest. We have the reason I've already mentioned. The entry, we have a bullish candle here. That is our entry. Our stop loss just below the box. Our stop loss is all about risk management and money management. Then our take profit, we made that this zone where price could have retraced. As you can see, price reached that zone, then retraced because it was a support and resistance zone. And as you can see, the price reached our take profit, and we said that this is a zone where the market might react. We anticipate that the market might react at that position. So let me show you why you should always know where to target your take profit, because this zone is about support and resistance. So you see, the market went down. If you could have targeted, like for example this zone, you could have waited for maybe a long time, or maybe the market would have retraced, then go down. As you can see, the market is just consolidating at that position. So learn to know where to take your profits. Don't just target like you target just up there. Okay, you can target up there. That is if you're a long-term trader, because we had this trader here, that aggressive trader who could have taken his buy from here, then let's say targeted that position, or let's say he targeted that position. Okay, so that trader, let's say you want to target like that position, I would advise you to take some partials or set your trade at break even, because that is if price goes your opposite direction, when it hits your stop loss, you'll be safe because you're not going to lose any money. Okay, so always learn to take partials, and remember to take your trades to put your stop loss at break even, that because when the price retraces you can not get into a loss. So that is it. That is the model for aggressive traders, and I'm going to also talk about now the trading plan you're going to need in order to for this strategy, that is support and resistance, trend lines, and all those. So we are going to talk about our trading plan from the first step to the last step, or in how we are going to, as you can see, price, that aggressive trader who entered here, taken some partials, put his stop loss, his or her stop loss at break even, will have taken his profit from there. Remember plotting our zones at the daily time frame, made a entry from the 1 hour, 5 minute, 15 minute time frame. Eventually the market went up. So that is support and resistance, trend line, and I've not yet taught about trend line. I've taught, but I've not made an example about trend line, but I'm going to talk about it so that you may not get confused. Yeah, so like for example, this is a 1 hour chart. We have this trend line here, as you can see, and as I said, the price must have 2 or more touches. As you can see, this price, the first touch was made from here, the second touch was made from here, the third touch was made from here. Okay guys, this strategy is a very easy strategy. You just need to backtest it, you just need to perfect it, nothing more, just a simple strategy. Okay guys, so as you can see, the market was in a trend line here. It made multiple touches here. You could have entered from any of these touches. Let's say it made the second touch from here. Now it made the third touch from here. You could have entered from this position because the first, we have a confirmation that this is a trend and it's going up. The second confirmation, let me remove this big. Okay, so the first confirmation, this market is in an uptrend. And remember, if you plotted your zones in the daily chart, that this is a zone where we anticipate that price might go up. So the price made its third touch from here, and we had a bullish engulfing candlestick. We had a very bullish engulfing candlestick, meaning that the buyers are in control. Let's say now, before I say something else, let's see where we could have targeted our take profits. We could have targeted our take profits from, we have this zone here, where market has reacted a couple of times. As you can see, support, broke, resistance, resistance, resistance. Could have targeted here, or you could have targeted that position because you have this zone where price might react. Okay, you can see price reacted there. So this is just support and resistance. So trend line, okay, we could have entered from we could have taken our trades from here because we have this bullish engulfing candlestick, or if you need more than 1 or 2 or 3 or 4 confirmations, see, we had this position where price acted as a support here, as a resistance, then price broke, now it came and reacted here. You could have put your buy limit from here. Stop loss this position, that position might be safer. That was our entry, and then you use risk is to reward of 1:2, targeted that position. That is another entry you could have taken from here. This one was an aggressive trader because he had 2 confirmations, or maybe 3. Yeah, that's good. We had support and resistance. From the daily chart, the price is going up. We had a trend line, and we had a bullish engulfing candlestick, meaning that buyers are entering into the market. That's also good. And we also have this trader who waited for a break and retest. That is also good, and that is safer than this one. Okay, I will go for the second entry because it has more confirmations than this previous entry. So you could have entered from there, and also price, before even reaching into our destination, we had another touch from here. You see, that is another touch. You could have entered even from here, put a buy limit targeted there, put a stop loss, let's say from there, just risk some little bit, not a very big risk, because we had here 2 entries. This third entry, this is a less risk. You do not want to target down there as your stop loss, because price will, when price goes against your direction, you could have faced 3 losses. That is 1, 2, 3. But this one, when you put here, you could have faced less loss. Okay, so it's just like that, guys. So the price made the 3rd, 4th touch, and then in the future, the price also came and touched our zone here. We had this zone here. Price came and touched our zone here. If I could adjust this zone, you will see that price came and retested our zone here. And if you look at your left, you can see that this is a zone where price acted as support and resistance before. So price reacted as support, then came and reacted as support again. That is a confirmation that this market is going to go up. Okay, and another confirmation, if you can see these candles formed here, this is a candlestick pattern. We have a doji candlestick, a small body and very long wicks, and a big bullish engulfing candlestick. I could have taken my trades from here because I have enough confirmations that this price is going to go up, and maybe, let's say, targeted this zone. You see, guys, support and resistance is just easy, very easy. And from all the examples that I've given from the start of the video, there is no entry that has gotten into a loss. Okay, there's no entry that has gotten into a loss. So you just need to backtest this strategy and know where to take your entries, and also know your confirmations. Don't enter into the market aggressively. You can enter into the market aggressively, but I will not advise you to enter that way. I would advise you to enter after a couple of confirmations, so that you can be sure, even if you can never be sure in the market, so that you can at least be 95 to 99% sure that the market will go up. So guys, we have another example here. We have an uptrend. As you can see, price is forming higher highs and higher lows. We have this trend line here, a very nice trend line. I told you the price must have 2 or more touches. The first touch, the second touch, the third touch, that is where you take your entry, because that is where you are anticipating the market to go. When price reaches at your zone, you look for confirmations, then take your entries from there. So that this is the 4-hour chart USD JPY, and we anticipate that when price touches this zone, we are going to take our buys from there. And another trick we use here, or another something that might help you in your strategy, when price gets into a trend line, I advise you to look at the left to see if that zone that the price is going to touch, if you have a support or resistance before in the market. Okay guys, always look to the left so that you can see if that zone recently reacted as support or resistance. As you can see, like for this example, we have that zone where price has been reacting for a bit of time. As you can see, it was support here, resistance, broke, came and made a support, then came again, made a support, broke. It did not give us anything here. Now we're anticipating that if price reaches here, we have many confirmations that the market might go up, because first confirmation or first reason, we have a trend line. As you can see, we drew it, we have that trend line. Another confirmation is that this is a support and resistance zone, because we had multiple touches from that area. Now let's drop into the 1-hour time frame so that you can see if you can take our entries from there. Price is moving a little bit fast. Let me go back so that I can explain to you. Okay, so that is a 1-hour chart. Price reached our zone and formed a bullish candlestick, though it is not a bullish engulfing candlestick, but it gave us a hammer candlestick. As you can see, we have a very long wick, a very upper long wick, as I said in our previous video. The hammer, in short, it looks like a hammer, a basic tool which is used for hammering nails. So as you can see, this is an inverted hammer. That is a confirmation that maybe the market will be going up, but we do not have enough confirmations that the market is going up. Now in the 1-hour time frame, we cannot see where to take our entry, so let's drop into the 15-minute time frame or the 5-minute time frame so that you can see where you can take our entries from. Okay, so we have a double top here. That is a chart pattern that this market is going to go up. And another confirmation is that we had, when price dropped, the sellers were in control. It made a bullish engulfing candlestick from here, then price was going up. Okay, an aggressive trader will have taken his buys from here, maybe targeted this stop loss from there. Now we have made we have had our reasons from the formula rest, our reasons, our entry, bullish engulfing candlestick, our stop loss below that box, or look at the left. Let's see if we have a low where price might be reaching at. You can target this low, the 153.598, but that will be a very big stop loss. Let me go into the 1-hour time frame so that you can look at that zone. You see, a stop loss will be very big. Okay, so let's go to the 15-minute time frame and see. Let's see if you can put a stop loss from there in order to be safe, and target the 4-hour time frame zone, the upper zone where we anticipate price might react. So we have this zone here, and we have this zone, but I will not advise you to take your take profit from this top zone because the price might not be able to reach at that zone. So let's go to the 15 minutes time frame and see where price will take us. Let's say you target that zone. That is the risk. Our risk is to reward of 1:2. Yeah, that's good. That risk is to reward is good because you are risking $1 to get $2, and do the math for any account balance you have. So this is the 15 minutes time frame. So let's see how the price will play out, because first of all we have this zone here. The price has made many touches from here, indicating that price might go up. Okay, because it has made 4 touches, price might go up. But that one who has been following what I've been saying, has been following my advices, I will advise you to take your entry from here, because that is an extra confirmation in your toolbox, in your trading toolbox. That is an extra confirmation and a very beautiful setup that the market is going to go into a direction, and it is safe. Okay guys, I advise you not to be greedy in the market, but this is also a good confirmation that the market is going to go in a direction because it has made 4 touches. But let's see, if price breaks this position then retest, I'm going to take my buys from there. I'm not going to take my buys from down here, because this is not, to me, this is not an enough confirmation that the price is going to go up. Price is going to give me an enough confirmation it's going up, because if price breaks this position and retests and form either candlestick formation or a chart pattern, that is an enough confirmation that this price is going to go up and sellers are weak in the market. Now let's play the market and see. As you can see, price is going down. Price is going down, guys. Price did not respect this zone. And if you could have put your stop loss just down here, maybe you'll be safe, but you'll not be, all times you're not going to be safe. Sometime the price might go to this zone and break it and go down. Okay, so price now has broken this zone, so you can move your take profit from that position, because the market has refused to go down. Now you can move your stop loss from there, and as you can see, I told you if price breaks this position, it's going to retest, and then I'm going to take my price from there. So we have this doji candlestick here. Okay, as you can see, you have this doji candlestick here. Small body, long wicks. Now let's wait for the next candle. Exactly. That is a bullish engulfing candlestick. Indication that the market is going to go up and is very, very bullish. Okay, guys. So that is where I'm going to take my buys from. That is an enough confirmation that this price is going to head to the direction that I'm anticipating. So taking my buys from there, look to my left to see my take profit. I have this zone here. Price has reacted a couple of times. I would have targeted that position. So the reason I entered into the market, the first reason, we had a trend line. The second reason, we went to our left to saw this zone here, both support and resistance. Now that is the reason. The next is entry. We made our entry at a position where price broke and retested, and we had a candlestick confirmation. Now what else do you need? That is enough. That is enough for the market to head into your direction. Nothing else. Nothing else you need for the market to head into your direction. As simple as that, guys. Just see this strategy. How is it simple? How it's very simple, guys. You see, the market reached that position and made a little bit of retracement. When prices reach a zone where there is a support and resistance, price will always react. will always react. Okay, so target position where we had a couple of touches, that is where you take your profit, that is where you put your stop loss. Okay guys, so as you can see, that is our entry, and the aggressive trader still is in profits, and let's see if the price is that position that we anticipate. Let's go into a higher time frame so that we can see we can have a view of how the market was going up. So that is always look at the confirmations. The confirmation, that last confirmation that I've taught, wait for price before entering into the market. Wait for price to break a zone and retest that zone, candlestick confirmation or chart pattern. That is where you buy your market. Because here, let me tell you why I'm encouraging that. Like here, for example, here, this position. Look, we had a couple of touches. We had the first touch, the second touch, the third touch. Now, the fourth touch here, maybe you could have waited for a bullish engulfing candlestick. That is where you could have entered your buy. That is enough, okay, but it did not give you a bullish engulfing candlestick here from the fourth touch. You could have also entered from here because this is a bullish engulfing candlestick. You could have entered from here, targeted your stop loss from below this box. Here it made the second touch but did not give us a bullish engulfing. You could have also entered from here, targeted your stop loss from here. You could have been safe. But guys, this was the best entry. This was the best entry. Why? Look at our risk. A very small risk. Very small risk. And the price did not reach for stop loss. That is enough confirmation that this price is going to go up. You see, it hit our take profit. Okay. So always wait for your setup to form. Don't just rush into the market. Don't be an aggressive buyer. Okay guys, you should always wait for your confirmations to form. Always wait for your confirmations to form. Don't just see anything in the market you want to trade. Anything in the market you want to trade. No. Always wait for your confirmations. Now let's see how this market played out. The aggressive trader who entered from here, it eventually reached that position that we anticipated because we were strongly bullish. You see, that's very nice pips. Very nice pips. Now here you could have taken some other trades between this market, but behind the curtain you have another trade from here, which is a swing trade because this is a forward chart. This is a couple of days. Okay. So guys, we have another example here, still on the USD JPY chart, the 4-hour chart. Now this is for a selling market. So first we go to the left. Before going to the left, we have this. This is where price has reached, and we had the first touch here, the second touch here. Now we are into the third touch, and we have this zone here where price has reacted a couple of times as support. Let's see. Yes, it has acted also as resistance. So that is a position where we can anticipate if price breaks this position, we might sell that market. So now let's head into the 1-hour chart and see if you can get something that will tell us that this market is going to go to the downward side. Okay, so as you can see here, we have this zone where price has reacted for a couple of times, even in the previous market. Yes, it has acted many times. So this is a major zone. This is a zone where price must react. As you can see, it made touches here. It consolidated in that position, broke, retested. It was a support here. It was a support again here. Price broke, retested, made a resistance, broke, support, 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 resistance. So that is a major position where price, when it reaches there, is going to react. So this is a trend. You can see it made our first touch from here, our second touch here, and you could have also entered from here. Look for confirmations because that is a double top. Yes, you could have look for confirmations from there, and also this is also a zone where prices reacted a couple of times. As you can see, support, broke, resistance, resistance. You could have taken a sales from there, second sales from there, then put your stop loss at this high. See that high, put your stop loss there, then targeted this position where price has reacted a couple of times. You see it hit your take profit eventually, but we missed that trade. So we have this position where price has reached a major zone. Our first reason for entering into this market is we have a trend line. The second reason is that we have this zone, it has acted as both support and resistance. So let's wait for confirmations, either a double top or a break of a zone and a retest of that same zone. So let's follow this market and see how the market will give us. The market is going down. You see this is a zone where market has become a support. It has acted as support and resistance. So the market is going up. Market is going up. Okay, so guys, let me rewind this a little bit from here. When you look at this market, this is this zone here where price was making a support and resistance, was getting a support and resistance. Okay, this is a support, price broke, it became a resistance, made a support from here. When you go to the lower time frame, let's say the 15-minute chart, let's look at the 15-minute chart so that you can see the view, a better view of how this market is reacting at that particular position. Just give it a minute. I think it's the net. We have a very poor connection today. I don't know why. Now the connection is back. Okay, so that zone which I marked. Now let's remove this one to avoid confusion. Let's remove that, and that we look at it at a later time. Okay, so we had this position which I drew, that position which I drew on the 1 hour chart. Let's remove this one because we've already talked about it. So that position, you see, price acted as a support here. It broke, made some resistance here and support. Price broke again, made some resistance, and price has again reached that position. Okay, so we are going to look for confirmations from here and anticipate ourselves from here. Okay, so the price has not yet given us okay, when you look at the 1 hour chart, the price gave us a very big bearish engulfing candlestick from here. Okay, sometimes when you wait for chart patterns and all that stuff, you might not get them, but just look for the enough confirmations. And if you don't get the according to your trading plan, if you don't get the number of confirmations that you need to get in order to make your entry, do not enter into that market. I advise you, do not enter into that market, because you might get into a loss, then start blaming yourself. Okay, and that is a mistake that you can easily avoid. So if you don't, according to your trading plan, if you don't have enough confirmations, please don't enter into that market. So we made a bearish engulfing candlestick here. Unfortunately, we will not have a chart pattern, but the first confirmation is we have a trend line here. And the second confirmation is we had a support, both support and resistance here, as we have seen. The third confirmation, we have a bearish graphic candlestick here. But you can also wait for either this price to retest or either this price to retest, because we had it acted as both support and resistance here. So you can target that zone, or because this is a bearish market, maybe look for where price has acted at both resistance. The first zone is that zone which you have targeted. The second zone, let me see. No, we did not make no, that is not the perfect zone. Let me delete it. Let's go into the 4-hour chart to see our target zones. If you do not find a place to put your take profit, you can use even the risk is to reward. Whatever you risk or whatever you get as your take profit, that is what you can use as a position where to take your profits, instead of looking for positions where to put your take profit. But I would advise you to look for position to put your take profit. As you can see, the market gave us a very big candle. Within an hour, we will have taken our profits. This is news. I guess maybe in NFP or CPI or any big news that candlestick eventually hit our take profit. Another trader would have targeted that low, this low, as you can see, that low. So let's play this market and see if the market would have hit that low. And also remember, we still have this trend line. We're not deleting it, because price might again react on that trend line, and that is where we will take our sales from. So that is 1 hour, the price is trying to go up. Okay, so the price eventually hit that low, and that low that we anticipated. So now let's wait for price to move, and let's wait for it to touch our trend line. So as you can see, the price reached that position and then reacted. It is trying to go up. Let me forward it. The price is still going down, and let's wait for it to touch our trend line, so that we look at our confirmations and anticipate our sell. You see that area we targeted, it has acted as support and resistance, the break and retest strategy. You could have taken from your sales from there, because you have a double top here. Maybe target that zone, take profit hit, consolidation. See, double top, take profit hit. Also, price made the third touch here, but the zone you could have targeted was here, but you would have not hit your take profit because the price is still being bullish. Now let's go into the 4-hour chart so that the price might go a little bit faster. So as you can see, price has not reached our zone that we anticipated. It has not reached that trend line. It is forming a new trend from this zone. Can you see that? Yes, I know you can see that. So it has formed another trend from here. Okay guys, so it made a first touch here, made the second touch. Now it has made the third touch from here. Okay guys, and this zone acted as support and resistance. When you drop into the lower time frames, you will see that there is some support and resistance here. You see the price broke, made a support, broke, resistance, broke, support, went up, made a resistance from there, broke, made a resistance. Now it is back to our position. And another confirmation that we have, the first is the support resistance. The second, we have a doji candlestick with a very small body and very long wicks. And another confirmation, very beautiful confirmation, that is our trend line. Though this is a very big risk trade, our stop loss there, our target was from there. That is a very big risk trade, but we have multiple confirmations that this price is going to go down. Maybe let's say target that position because it reacted as support and resistance. So that is the position we are targeting. Now let's see how the market played out. This trade that we are taking right now, it has multiple confirmations. So this price should just go down. It is a must it goes down. Not like a must, but it should go down. Okay. The price must go down. Whatever you do, we must go down. You see guys, it eventually hit our take profit. I know guys, if the price reached here, you are like, the price will go up. But it was just retesting that zone to see if you'll take your partials or close your trade. That's another confirmation that price will have gone down because we have support and resistance there. The trend line was there. We have a bearish zone here. We have a bearish engulfing candlestick here. You can also have taken your trade from here because we have a confirmation from there. Maybe put a stop loss someplace safe. Okay, according to your risk, maybe target maybe target that zone. You see, you'll have it at take profit. That's another trade, and eventually price is starting to react at that zone. So guys, we have come to the end of the video, and we have learned that we have a formula for getting into our trades, the rest of the rates, reason, entry, take profit, stop loss. We need our confirmation, that is the support and resistance, trend line, candlestick confirmations, and chart pattern. So that is what I've learned from the first video and this second video. This second video is all about the examples, and the next video that I'm going to make, it's all about the trading plan now. So the trading plan is going to contain what the first step we're going to take, entering into the market, marking your zones and whatever, and all of that stuff, the reason, the entry, the take profit, the stop loss. We're going to put it all in one plan so that you can this is a whole strategy. The trading plan is going to be to make it complete. Now you have learned the strategy, yes. What is your plan? Just don't enter the market with what I've told you. You need a plan. Okay, so the next video I'm going to make is all about the trading plan. So stay tuned. Kindly like, subscribe, comment, and share this video to as many people so that we may grow together. You grow in your trading market or your trading career. I grow in my YouTube channel and I help many people out there. Okay, so guys, goodbye and good night.